Okay, welcome back, guys. Let's get right into the stock market technical analysis. I'm going to go through the broad markets. We'll look at the triple Qs, some different sectors. And then I've got a couple of trade ideas that I marked down, really looking for, just a mix. There's some longs in here as well as some additional shorts. So let's get right into it, guys. Triple Qs is, you can see from here, we basically are, we have this overshoot still of this bearish rising wedge. That hasn't changed. Nothing has really changed, even though, we did have a really impulsive kind of parabolic price action. We still have this bearish rising wedge. We still have negative divergence, and we have this overshoot. All right. So bigger picture, it to me looks like this is going to fail. When I see these typically, given the nature of the divergences that have been extended and remain intact, I suspect this overshoot here is going to be a bull trap and fail, and it's ultimately going to break down. All right, and we're going to start to see impulsive selling breaking below this bearish rising wedge. Okay, that's what I see in triple Qs as of right now. So it doesn't have to be that way, but that's what it looks like is going to happen. Now, better off to probably just wait for the breakdown. All right, you start to break down from this wedge right here, see an impulsive break. That's really going to be your next sell signal. And so nothing's really changed over the last few days. I didn't do a video yesterday because I looked at the charts. I kind of looked across the market and I didn't see anything to really just talk about. And I don't want to just waste people's time and my time as well putting out a video that's, where there's really nothing to talk about. So we're starting to see some selling today. We'll see if the buyers step in. You've got this big impulsive candle right here. You take out the candle, it's going to bring you down to the bottom of the wedge, and then you take out the wedge, and that's pretty much going to be a nice sell signal. And this bearish rising wedge that has been in play pretty much all year, you take the widest part of the wedge and kind of mark out that that breakdown point, and it's basically setting us up for, as of right now, it's setting us up for a move minimum down to this 293.28. Okay, that would be the measured target for this wedge. So yeah, that's kind of what we'll be looking for. That's a drop of about 12% from where we're at right now. And that would pretty much wipe out about half of the year's gains. So we'll see if that actually plays out. Looking at the daily chart, you can see here's the PPO. We still have negative divergence. Nothing has literally changed. I mean, you've got a high, lower high, lower high, not confirmed yet on this latest move up. So you do want to see the PPO start to turn down like that to confirm that divergence. But if you see that, ultimately, each little high we've been making has been a divergent high, and it's indicating a pretty big, trend reversal. All right. And the trend for this year has been up. So what I would be looking for is a reversal of this upward trend and start to trend lower. So that's bigger picture stuff. That's not going to play out, today, tomorrow. But again, it builds incrementally. And if maybe it starts today and continues to add. Obviously, we've been early on the short trade, but I still see the charts are still set up for that trend reversal. Until I see a change there, I have to go with what the charts are telling me. So that's that. Let's look at the NASDAQ futures. All right, here's the NASDAQ futures. Same look. You can see bearish rising wedge, overshoot. So again, what I'd be looking for is a move down to the top of the wedge and then ultimately breaking down to the downside of that wedge. You see that? That's going to be your sell signal, and that's a setup for a short trade to the widest part of the wedge, which, is basically going to be, it's going to be the lows. As far as I can tell, it's these lows right in here. Let's just mark those out somewhere right in there, and I'll have to tighten it up, but it's basically, signaling a move down to that about 11,960. All right. So nothing's changed there either. Subscribers asked me to cover IWM a little bit. I don't see any tradable action here. I just don't see much going on. I mean, we're right at the 200 and so far just holding below the 200. You can see we broke down, rejected. There's also this upward trend line to watch right there. In general, it's kind of this sideways chop. There's just nothing to really, nothing to really get positioned off of, at least for the longer term. Yeah, if you want to take a 1 or 2 day trade, maybe a week-long trade, maybe a 2-week-long trade, there might be something there. But in general, I'm trying to point people out on, the larger trends when it comes to the broad markets. And I just don't see much going on. Below the 200, there's no real divergences. I mean, you could consider this maybe a divergent low. I don't think it's quite enough there to consider that a divergent low. So we'll just move on. I just wanted to pull up, get rid of all these ads. Just wanted to pull up the FinViz S&P 500 heat map. And you can see today, the FANGs are basically down. Amazon and Meta are up. Google's kind of down a little bit. But the one thing that really stands out to me, that's just kind of interesting. Obviously, oil looks strong today. But the thing that's interesting to me is this right here. In the financial sector, Visa and MasterCard both selling off impulsively. Okay, kind of interesting there because that's the consumer. All right, the consumer, if they quit spending, and again, the consumer spends on credit. That's basically the nature of it. Then that's the economy is going to roll over if the consumer quits spending. So something to look at. Let's look at the chart. Here's Visa right here. So I had this trend line right here, but as of now, I've kind of got this one here. Lows, reaction low, starting to break. Now the day's young still, a few more hours in the day, and we'll see how that actually plays out if you get that sell signal and get that daily close below. But it's looking like it might happen. And again, if I roll out and look at the divergences, look, you've just got continued negative divergence that's really just remained. All right. This last high was it was a higher high than the former high. There's your former high here, and you made it ever so slightly marginal new high right there. And that was a divergent high. Momentum was much less than before. So you have negative divergence. You have this trend line to watch. It's starting to break. We'll see if that actually plays out. That could be a sell signal depending on, how it closes. And then here's, this is American Express. We'll look at this one. Now this is the more affluent spender. The American Express caters to the more affluent spender. Haven't really charted this one up. I think we've got a potential trend line right there to kind of look at. It's right about there. I don't see much on that one. We'll flip over to MasterCard. And usually, the more affluent consumer can last a little longer. They don't roll over as quickly. This one on the daily chart, I've got this trend line right here. Several reactions. You can see basically we've got 1, 2, and we're starting to break there on a potential sell signal. If I roll this down, it also connects right there. There it is. So you can see there's your trend. This is going back. For the most part, this is going back from October of 2022, and you've got this upward trend. Look at that. So if the daily candle, if they don't save it, and we get the, because they could step in and save it. Let's watch for that daily close. Daily close below there, and that's a sell signal on these credit card companies, and that really is the consumer basically. Okay, speaking of the consumer, let's take a look at the interest rates there. This is the 10-year. You can see the interest rates have been rising, all right? The interest rates from the lows to where they're at right about now, up about 10% in a matter of about a week and a half or so, 2 weeks. So interest rates rising on the 10-year are negative for tech stocks. That's just the nature. The market will start to read into that, I believe. And so if we continue to see the interest rates rise, we should continue to see tech stocks, pressure put on those tech stocks. You can have, you can have divergence from that for a period of time, but ultimately rising interest rates over the over the longer term will be bearish for tech stocks. Okay, so that's something to look at. And then the dollar. We'll take a look at the dollar here. See, the dollar's been rising as well. Potential breakout of, it is a breakout of the dollar. I didn't like the trend line that much, but again, the dollar is starting to rise, putting pressure on gold. and should continue to put pressure on multinational companies, as well as, this is, again, all playing into the interest rates, and it's all kind of tied in together. So let's look at the home builders, because home builders are very interest rate sensitive, and I was scanning through these today. I'm seeing some interesting stuff. DHI, this is a home builder, upward trend line right here to watch. Clean negative divergence that's been building pretty much all year, or since October basically. Negative divergence on the PPO, and the negative divergence in the RSI was kind of burned through, but you got another one right there. So negative divergence on both momentum indicators, but no sell signal. We have not broke trend yet. So, and that's what I'm seeing across most of these. Here's Lennar. This one, if I kind of roll this out, can't quite make the bottoms there, but enough reactions on this trend line. All right, support, support, support. There's another one, and we've got a sell signal today. So unless they step in impulsively, that's a breakdown and a sell signal on Lennar. Another one, I think this PHM, Pulte Homes. So this one looks similar to DHI. Negative divergence, just a nice clean negative divergence right there on the RSI and the PPO. All right, it is clean and clear. And we have a trend line to watch. Now, no sell signal, so no reason to short it yet, but there's several reactions on that support line. We need to see this break, this trend line break for the sell signal. And Toll Brothers, this is kind of more of the luxury homes, but still, this is the trend line that I can make. Clean negative divergence. Look at the PPO right here, starting to turn down, confirming that divergence right there. And that is just a nice divergence. It basically is telling me that these are about to break, and there should be a sell signal soon. I've got support, 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 and we're right on support right now. So no sell signal in these home builders, but they all have divergence. They all have a trend line to watch, so we'll watch them, and if we start to see breakdowns, then that's likely going to indicate, that the home builders are going to roll over. This one has earnings. It looks like after the bell today, so we'll see how that plays out. I wouldn't, I'm not taking a trade on this one ahead of earnings, right at support, but we'll see how it reacts after earnings. Okay, let's keep on moving. AEHR. I don't have any idea what these guys do, but this was a trade that I have been following. We talked about this on the Saturday live stream. So on this one, look at this divergence. It's just been building. Like, you had divergence basically here. It's just been extending. This is a larger divergence now. It's pretty much on a weekly chart. Big divergence. And then even in the short term, you've got divergence right here. So that's a divergent high. Again, there's your trend line to watch. Support, support, support. There's kind of a reaction right there, and we broke, and there's a back test. All right. So that's objective. That's an objective short basically right there. It's not quite at the trend line, so they could pop it here up maybe. Well, that's the thing. This has a pretty wide range, and my trend line, I could be off slightly. In general, you can see here if I look at if they do a back test, that's 8% to the upside just to back test there. So, if you can't ride out an 8% move, I think it just makes sense to maybe position lightly. This one, just this back test alone that it's rallied up 40% just in that back test. So, maybe taper down your position size. I don't think it makes sense to have a huge position size because this one obviously can move. The range on this one is pretty large. So, but that is a back test. It's an objective short. It's not a perfect, if you're up here at the trend line, it'd be the perfect entry, but you might not get that perfect entry. And then support, there's a reaction right there at 27. You've got obviously a reaction right here. This is definitely where I would put the target at. And then I think you're probably going to break and run down and fill this gap all the way down here at 17. That would probably be my final target. Okay, if the consumer's about to roll over with their spending, then the casinos in Las Vegas are going to roll over as well. Here's Wynn. Now, Wynn does cater to a higher tiered market, but again, it's casino. It's all about excess money. and the consumer will start to tighten up if there's issues. Big negative divergence on the PPO, and the negative divergence is there on the RSI as well. You can see it's even extending right there. So this to me looks like topping price action. You pop up, divergent high, divergent high, divergent high, divergent high. Each divergent high just barely pops over and then gets sold into. And then we've got support. You know, to give it the benefit of the doubt, you probably want to, you know, really these former lows right here, because you have several wicks where we kind of dipped below and then it held support right in here. So I'd rather just wait for like a break of that kind of those lows with a nice impulsive breakdown will be your sell signal. From there, you should run down to the 200-day moving average and ultimately start to trend lower, because this is a large divergence. It's telling me that this trend is changing. So you had an uptrend, you flattened out, and now you started downtrend. Here's another gambling stock. It's it's an online gambling stock, so not in Vegas, but DraftKings. So you can see here clear negative divergence on the daily chart. Nice, big, large, well-defined divergence. So I like that. And then negative. You have a bearish rising wedge. All right, we've just been building on the wedge. Objective to short at the top end of the wedge, obviously. Doesn't mean it's going to play out. And again, you could have that overshoot like we just saw in the triple Qs. You have to be willing to ride that stuff out, or not. You can always stop out and then just get back into the short if you do start to break down like this wedge and these negative divergences are telling me will likely happen. And so again, at this point, I probably would want to wait for a break of the bottom part of the wedge right here for the sell signal. Okay. Break of that wedge is your sell signal, and that should set this up for a move down to the 200-day moving average. And probably this, you can see a little support shelf right in there. Oh, let me grab the right tool. A little support shelf right in. Yeah, it's right about there. And right around the 200-day moving average. So something to watch for on that one. Okay, let's look at some long trade ideas. Well, first I'll cover wheat real quick because I know we've been in that one for a while. Here's wheat. This is the wheat futures. My wedge is kind of getting broken. We did just make a new low, a new divergent low today. All right, this one has large bullish divergence. It's a really large divergence, and you can see every single time you make a new divergent low, the buyers are there stepping in. And so just like today, we made a new low intraday and the buyers stepped in, they're bidding it up. So I still like it. I still think it looks good. We're just building bullish pressure within this wedge. Let's look at the actual ETN wheat. On this one, I kind of remarked my wedge here just to line up a little better with the most recent price action. So I've got right here, I've got support, I've got another reaction there, and I think I got another reaction there. That makes 4. That's the wedge that I can make right now. Up today, again, bullish divergence remains. So it's the same story. It's basically just a big bullish falling wedge and big bullish divergence, and it's just a matter of when does it break out. Okay, so if you want to wait for the breakout, that makes, at this point I think that makes sense if you're not already in this thing. If you're in it, then I don't think it, I still like it as a long trade. It still looks constructive, so sticking with this one. Okay, potential long trade setups, not really actionable, but something to look at. Here's Etsy. So on Etsy, I've got this, and these are not necessarily large trending trades, but maybe, we'll see. I've got this trend line right about here to watch this kind of a downward trend. We have what looks to be the forming of a bullish falling wedge. Not super well defined, but it's there so far. And we have some bullish divergence. All right, you can see there's the bullish divergence on the PPO, and it's down there on the RSI as well. If I can mark it out, it's like there. So bullish momentum, in the short term, bullish falling wedge. So you wait for a breakout for your buy signal, and that would set this up for a move probably to the 200-day moving average. The measured target of this wedge would be something like Something like that, I think. And again, that's setting us up for a move up to the 200-day. So that's a potential trade setup, not actionable. I'm not long this one, but we'll see if we get that buy signal. And then we've got, next up, I've got Lyft. So on Lyft, you can see Lyft has, it's really been kind of grinding lower, trending lower on this downtrend line right here. And recently just basically been holding, my trend line might be slightly off, but basically been holding along that trend line. We have some bullish divergence that is there now. So right there, not confirmed. You'd like to see the PPO start to turn up to help confirm that divergence. And then there's a potential wedge. I don't have a whole lot to go off of to make a wedge yet, so maybe that. But again, I only have 2 data points, 1, 2. So not the best setup, but it is working its way lower along this trend and building some divergence. You might get a pop. There's a gap to fill right here, so that could be a short-term kind of move up there to fill the gap. Still, that gap fills about a 30% move just up to that, up to there. So, so there is a potential long trade. There's nothing to really buy off of. I don't have a buy trigger. If you really want to narrow it down, you get down to the hourly. Maybe you can mark this kind of recent price action here out and wait for a break above this potential move, this trend line here. You break there, then you probably run to go fill that gap. All right. Like this, break, maybe a back test, but ultimately run to fill that gap. And that would, at this point, that'd probably be the trade. Okay, quick look at the FANG stocks because they've obviously been pretty much responsible for keeping the market, the S&P just kind of flat, and then most of the rally has taken place really just in these FANG stocks. Not just a handful of stocks. So we'll look at these. Amazon, all right, uptrending. Still have that, we're still diverging. We're still making a divergent low. Or sorry, this high right here above the former high is a divergent high. It's not confirmed yet, so you'd want to see the PPO turn down to confirm. Otherwise, it's going to burn through it. So, a couple of things, it's a little work to do there. You'd want to see the PPO turn down, and then ultimately, really a break back below this former high would be the sell signal. All right, that's right there. I think a break back below about 113-ish, nice impulsive close below that would be the sell signal. Otherwise, this can continue higher. So nothing on that one too much. Google, we'll look at Google's probably the strongest one. I know it's been really the center of the AI pump. Right now, there's just this AI pump going on that is just speculative. It's not, it's not like the companies are more profitable due to the AI. It's just hopes and speculation that in the future they'll be profitable. We see a lot of this in bear market rallies. This one, here's the downtrend line. Obviously, trending higher. We had divergence, but it did burn through it. It looks like, especially on the RSI, did burn through that divergence. So that's definitely one of the more bullish looking of the FANG stocks. Former high right here on Google, 112.30 or 122.36 ish, and we're above that now. So a failure back below that will start to send this thing lower. With the divergences being taken out, I need to see a little more on that. But ultimately, let's look for a breakdown back below this 122.36-ish level for a potential sell signal. Otherwise, it holds and continue higher because obviously the trend in price is up and the momentum's not really diverging. Microsoft, we're making a new high. Former high right here on Microsoft was about right here. If I roll back, you can see it right in there. Several reactions really on that trend line, and that's about 315.50. We're above it now, but this little pop above this former high is diverging. All right, that is still negative divergence on Microsoft on the PPO. The RSI, we did kind of make a new high right there. I mean, it is there, so can't necessarily say that is diverging on that one. So kind of mixed on that. And then Meta, Big negative divergence on Meta. Meta, I saw some news. They're trying to ride the AI wave as well. They all seem to kind of just pile into the speculation just to get stocks to pump. But negative divergence. We've entered this gap, though. That's the thing. There's this gap. Let me just double check to make sure. The gap entry, it's really, I got to almost adjust it. It's really right there on that blue trend line right there. And if I roll out, no, we haven't actually entered the gap completely. You can see yesterday closing basically right on the gap. Today, intraday, we're entering the gap. So we'll see how the close goes. If they close it in the gap, then you're likely going to go fill the gap. And that's a move up here to 290, 289.50 or so. So again, not anything I want to necessarily ride short. There's still another 15% upside on that one. So we'll see how the day closes. Definitely a negative divergence momentum. Okay, and then Apple, the biggest thing I'm really watching on Apple, those former highs right there. Let's zoom in. Again, I've just been talking about those for a while, but you can see here the 176.40 was the intraday high, and then the close was about 174.50 or so. As I roll into the price action right now, you can see we've definitely had a close higher than that 174.50 because we did close right there about 175.22. So, 50, 60 cents above that former close. Intraday, we have not been able to make a new high above that former high. So this is resistance. All right, this is the zone of resistance. No potential sell signals quite yet, but negative divergence has been building pretty much in Apple all year. Not quite all year. I mean, obviously, this impulsive price action was pretty bullish, but then every single high after that, although price has been moving higher, it's been diverging lower. So, yeah, bearish rising wedge, and the wedge has kind of gotten destroyed at this point. So we'll have to watch for. I need to see some sort of reversal candle or something, and we'll watch the other things as well. All right, so I'm going to get the video guys out. Been about 30 minutes. Let me know how I'm doing. Drop me a thumbs up. Obviously, I'm not going to get every trade right, but there's some trade ideas. Manage your risk. Take a position size that, if the trade goes against you, you don't send me hate mail, all right? Because at the end of the day, I can't manage how much money you're putting into anything. I can't manage your leverage. I can't manage any of that. All I can do is really give you guys trade ideas, kind of let you know what I'm doing, but we're all responsible for our own position sizing. So, all right, guys, I'll get the video out and catch you.